Well, the GST Council on Saturday deferred the decision on rate cuts on life and health insurance premiums. In fact, the government says that some more technicalities need to be ironed out. And on the back of that, ladies and gentlemen, we saw insurance stocks tumbling in trade today as much as 8%. Remember, the GST exemption or reduction on life and health insurance premiums has been a long pending demand of the industry, as the move would alleviate the tax burden on both the insurers and, of course, policy holders. In fact, in its November meeting, the GOM proposed exempting premiums for long-term life insurance from GST and recommended an exemption for premiums paid by senior citizens for health insurance. In fact, it also suggested exempting premiums for health insurance policies with coverage up to 5 lakh, but 18 lakh GST will remain on policies with coverage exceeding 5 lakh rupees. So what's really behind this delay and the decision of the government? And is healthcare not a priority of the government? We'll be debating and discussing all of those pointers with respect to this big story. But let's first take a look at what Finance Minister Nirmala Sitharaman had to say on that announcement.
The GOM on health insurance, in fact, I may suggest that I must inform that the chairman of that GOM, Deputy Chief Minister of Bihar, was for almost just before lunch, he left. He was there in the morning session. And since he had to leave a bit early, he decided that the council take that issue up first. And he did say that after good work, it's felt that it requires more time, and therefore health insurance related GOM work also requires more time, so they have gone to take more time. On one or two specific grounds which I would like to put before you as to why it had to have more time, insurance and therefore the insurance regulators' input is awaited. IRDAI, the Insurance Regulatory and Development Authority's inputs have not come, so the GOM felt that it needed a bit more time.
All right, so the finance minister over there stating that the group of ministers is waiting for insurance regulator IRDAI's report on the matter. And of course, to discuss that big decision, well, I'm now joined by Nilesh Sathe, former member IRDAI, and of course, Karthik Mani, partner Indirect Tax BDO India. Let me first come to you, Mr. Sathe. Now, big decision was expected on insurance premiums. Remember, this is something that has been raked up by not just the opposition party, but in fact, even by Union Minister Nitin Gadkari, who even penned a letter to the government and of course requested that there is perhaps no need in how the government can really tax uncertainty in life, and rightly so. What do you really make of the government now looking at deferring this decision, and what's taking the government so long to take a call on this?
It should not take such a long time to take a call. I think political will is required for taking such decisions, which appears to be lacking a bit. There are only two issues. One is state governments which are getting a share of GST collection, which Madam herself had said that in the last 3 years, 24,000 crores have been collected on account of GST on insurance. And she also said that 74% of that is going to the state governments. So when there is going to be a revenue loss to the state government, they are demanding that how will you compensate us for the loss? This was one issue. Now, arriving at how much exemption should be given, one or two proposals were there. One is exempting the term insurance from GST altogether. Second is health insurance premium altogether. And for senior citizens who are beyond 60 years of age, for them, any amount of insurance premium for sum assured beyond 5 lakhs also should not be in the ambit of GST. In addition to that, what is not talked about is the motor premium, which is a third-party premium. Since it is governed by a separate act, even on that, there is no need to charge 18% GST. So third-party motor premium also is likely to be exempt from GST. Now, these were a couple of issues. Question is, consensus is not there. That is something which Madam said. Now, forming a consensus cannot happen on its own. Somebody has to make efforts for consensus. And who else other than Finance Minister herself should make such efforts. So this is one point.
Absolutely. Absolutely, Mr.
Second
Sati.
is on loss of
Absolutely.
revenue to the state governments. Again, it is for the finance minister to work out and advise that this is how we will compensate you to the extent. Or if it is not possible, as it is, most of the state governments are in favor of, including West Bengal, because Mamata Banerjee, in case you remember, she had openly come out that there is no need to charge GST on insurance
Right.
premiums because it is necessity of life.
Right.
So I don't think state governments are actually working more on loss of revenue on account of GST loss. But consensus,
Right.
I don't know what
Right.
additional information is sought from IRDA and they are waiting for
Absolutely.
it. But then that should be done quickly. Hopefully, in the next
Yes.
meeting, it should be sorted out. Otherwise, you have seen how the stocks have tumbled today because the decision is deferred, and this is impacting
Absolutely,
the
Mr. Sati, and
consumers
we'll
who are
have to
not.
see how that really pans out in the next GST Council meeting, or whether that happens or not, because there will be a report also presented. So let me take that question to Mr. Money. Mr. Money, do you think that is possible in the next GST Council meeting?
Considering how the government has deferred most of the decision till now, it is very unlikely that they will take a call on insurance so quickly, that is within a month's span of time. As Mr. Santya highlighted, it is very much hitting the revenue of the state governments, unlike any other products or any services where the end user is not a company. So here, end user is an individual where the revenue directly goes to the government. So it's not a case of where the receiver is taking input tax credit. And even in those cases, let's say, for example, term insurance, a group term insurance or a group medical insurance taken by a huge organization, especially IT/ITS, which employs a lot of employees, they take these policies. They don't get a credit on the GST that they pay on these services. So this entirely goes as a cost to these organizations. The moment it's a cost to them, it is a direct revenue to the government. So the government is not, maybe the state governments are not ready to let go of this direct revenue, which is not going through the route of input tax credit.
Absolutely. Mr. Mani and Mr. Asati, let me come to you on that point about, input tax credit. There are also concerns in the industry that that input tax credit could be passed on to consumers, and hence it could neutralize the impact of a waiver on GST. Do you see that happening, and how will the government then really be making sure that the burden is not passed on to the end consumer?
Savita, I beg to differ. Insurance companies are taking input tax credit on the GST, which is paid by the consumers. They are taking. And to the extent,
Yes.
what amount of GST has been paid by the consumers, it is not exactly the same amount which is going to the government. After input tax credit is taken by the insurance companies, only the balance goes to the government. So that is something which needs to be worked out, because some data will have to be culled out from the insurance companies to find. Suppose they have collected 100 rupees and deposited only 70. That means the loss of revenue to the government is going to be 70, while loss of revenue to the insurance companies will be 30. Precisely, this is what is the meaning of it. And insurance companies are also not keen on, losing this revenue on account of input tax credit. You may be aware that if the rate is reduced to 5% or 0%, they are not going to get any input tax credit. So probably they are also of a view that if it is reduced from 18% to 12%, they will also get benefit of input tax credit, as well as consumers will also get benefit of 6% reduction in GST. We are not quite sure what stand government is going to take, but it is very much necessary that insurance, especially the term insurance and the health insurance, there is no need to charge GST on that. It has been done for long, and it has been increased from 5% to now 18%. Even when GST was introduced, the earlier rate was 15%. It was increased to 18% by the present government. They could have reduced it to 12%, but that has not been done. So it is highly essential that the consumers get benefit of it, and insurance companies will pass on this benefit. There is no reason why they should not pass on the benefit. See, the premium reduction is not on GST or any other matter. It is based on claim experience. So the claim experience, if it is favorable, the premiums will definitely come down. It is going from the consumer's pocket. So as a result of which, they are waiting for this reduction, and hence the industry is getting impacted. In the last 3-4 months, there has been not much of growth in insurance premium collected, and the same trend will continue till March. And finally, the figures which we'll get by the year end probably will be disastrous. So it is necessary that decision is taken as quickly as possible,
Right.
so that people don't wait for reduction, whatever government
Okay.
thinks of. But taking a quick decision is important. And hopefully in the next
Right, sir.
meeting, it should be taken.
Right, Mr. Sathe. Right, Mr. Sathe, very, very valid points that you've all raised. In fact, this was very much needed given that many households in India are just a major illness away from, and which is why it is, of course, the need of the hour to expand that healthcare cover. And of course, inflation as it is, Mr. Money is eating away into savings. But what sort of an impact do you think this will have on the healthcare sector and, of course, the insurance business if GST on premiums is indeed reduced? And of course, what is the key concern that the industry really has with respect to this matter?
So, as Mr. Sathe rightly said, it is the credit that hits the insurance company. When let's say if we have to look at it, the rates that are charged for the insurance companies today. If it is, let's say, an endowment policy, which is first year and second year, there are different rates. It's not effectively 18% that you pay on it. You pay a 4.5% in the first year, 2.25% in the second year, and an annuity policy suffers a much lower rate of 1.8%. So they have to bring term insurance and medical insurance in line with these other insurance policies at a reduced rate, but don't restrict the input tax credit. So that is the key element here is restriction of input tax credit. The government cannot say that we have reduced the rate to 5%, so don't take credit. That should not happen. Allow the input tax credit to the insurance companies so they can pass on the benefit to the end user. There will be a reduction in the premium only if the government allows input tax credit to the insurance companies. And second part is, let's say there is a exemption given. How it's going to impact. Today, insurance companies have exempt policies. The micro insurance policies are exempt, where the insurance premium is up to 2 lakh. Let's say government brings in similar condition for the proposed health insurance and term insurance. Then they have, to the extent of turnover that they have for these insurance, they have to do a proportionate ITC reversal, which is input tax credit they have to reverse, which is a direct hit to the cost of the insurance companies that they will try to recover from the end users. So the price of the policy premium will go up. So the point is, you have to reduce the rate, but without any ITC restrictions.
Absolutely. And this is the point, Mr. Money, that I was making just a short while back, that the pressure of input tax credit should not really be coming on consumers, because as it is, there is inflation which is eating away into savings, etc. Mr. Sathe, let me also ask, the government says that more deliberation is needed here. But wouldn't you say that it's government's social responsibility to get as many people as possible under the insurance cover? Of course, you have the Bima Sugam Yojana as well. How will it be possible when premiums are only increasing? Because by one estimate, the cost of premiums has really increased by 30% post-COVID.
It depends on the claim experience. The PM JJBY and PM SBY schemes were running in loss for so many years. And it impacted more after COVID because the experience was still worse. As a result of which, it was necessary to increase the premium, which has been done. Second is, at one point of time, government had made a declaration that insurance companies' loss on account of these schemes will be made good by the government, which government has not done. They have gone back on their words. This is second. Third is, all said and done, what micro insurance policies are exempt, that's true. But the amount of premium that is collected on account of micro insurance is highly insignificant. It is not even 0.01% of the total premium collected by insurance companies. So let us not think of that. Again, in case of annuity policies, there is no parity. The annuity policies sold by NPS do not attract GST. But sold by insurance companies, they are attracting GST. Now, even that has to be looked into. Why is it that? Because both are giving same benefit, no pension. So these are some of the things which government should think, because insurance is a very, very important sector for helping government in raising funds. You may be aware that
Absolutely.
50% of the investable fund of insurance companies goes into government securities. Who else is funding so much for government securities other than insurance companies? Not the banks or the mutual funds. It is only the insurance company. And insurance companies are
Absolutely.
helping government in infrastructure development by buying huge amount of amount of securities at low rate of interest,
Absolutely.
because they are not in a position to earn higher rate of interest, because the act prohibits them from investing less than 50% into other than government securities. So
Right.
when insurance sector is helping the government to such an extent, government has to ensure that the sector grows, and such decisions, if deferred, will definitely
Absolutely.
impact the growth of the insurance sector, which is not good for the country also.
Yes. Absolutely. Growth of the insurance sector, and of course, it also impacts, Mr. Sathe, affordability of insurance policies to consumers as well. And of course, like you rightly said, that the government mopped up a revenue of around 8,000 crores at 18% GST. So that very important point also coming through from you on there could be some pushback from states as well. But of course, as Mr. Samrat Chaudhary, the Deputy CM of Bihar, said that many ministers were of the view that this should happen in the next meeting. So that's going to be the big thing to watch out for. And like you rightly said, Mr. Sathe, and of course, Mr. Mani, this is something that the government should look at on priority.